Austin Real Estate Daily. My name is John McClellan.
I'm Jason Lewis.
And we're here to give you a couple of tips and hints about what's going on in the market today. Jason, what do you got?
We got a bunch of stuff coming out today. Actually, we got some new big rule changes that came down from HUD.
Big rules.
Yes, they are actually going to look to do several things, or they're proposing to do several things.
We're in the comment period right now.
Exactly, which is good because they're giving us some time to send in comments and either object or give them some advice on what to do with this.
It's not that they're going to take our advice.
The three things that came out are, first off, they're no longer going to be doing loans below 500 credit score.
Well,
I was unaware that they were at any point doing that.
I've been missing out on that business this whole time. I could have been doing loans with less than a 500 credit score.
With below, if you have a 580, you have to put 10% down.
Wait,
Also,
you were doing loans below 580?
I had no idea that was out there either.
Look at all the business that we're missing.
Seller concessions. This is the big one. This is the one that people need to pay attention to.
We can start doing loans below 580 credit score?
No. Nobody's doing them, but they're going to take up time and energy to talk about something that is not even being done anyway.
Can you say out of touch?
Don't get us started on that.
What's the next thing?
Seller concessions. This is the big one. They are actually, this has been in the pipeline for quite some time. They're going to lower the seller concessions. Proposed lowering the seller concessions of 6% to 3%. That could be big.
Yeah, on a $150,000 property, that's only $4,500 for closing costs and prepaids like taxes and insurance to set up an escrow account. And that's really not going to cover all the closing costs. And what they're trying to do is to get the borrower to have more skin in the game and get sellers and appraisals to maybe be a little bit more in line.
Sure.
But really, this only hurts people with
below 150 or 170, somewhere in those.
Yeah.
The lower price points is the ones that are going to get hurt the most on this. Not sure where they're going with that.
$200,000 house, that's plenty of closing costs.
Plenty of room to roll in that.
150? Not so much.
Okay.
What about 100,000? They're really penalizing people about below $100,000. They're going to have to bring their 3.5% plus a ton of closing costs. So I guess we're just going to have to start doing more expensive houses.
The last
third thing, third proposed rule change.
Stricter manual underwriting. Don't do a lot of manual underwriting anyway, but it's one more thing. They're going and kind of, the talking heads like to hear themselves talk. So.
See, exactly. And I think they are a little bit out of touch. And I think what a lot of people don't understand is there is a filter between FHA and between the borrower. And that filter are lenders like us, is the bank. And we put our own underwriting guidelines in place that actually are different probably from some of HUD's guidelines because we might want to underwrite something a little bit more conservative. So when HUD says they're not going to do below 500 credit scores anymore, we've already been that way for a couple of years. They say they're not going to do below 580, we've already been like that for a while. You know, less than 10% down. In fact, most lenders are at 620. Some lenders have been at 640 for a while on FHA loans. So
some lenders have actually already gone to the 3% seller concession.
That's right.
We are still doing the 6%, and it looks like that may be going away. So if you do have borrowers that need the 6%, that's one more thing that you can tell them to kind of get them off the fence, that take advantage of it now because that may be gone very shortly.
That's exactly right. I think one of the things that HUD is proposing to do with this 3% seller concession change is they think that appraisals are manipulated with that 6% seller concession in there, because really the bottom line is on a $150,000 house, if you're purchasing it for $150 and 6% coming for in closing costs and prepaids, then really the value is actually 6% less because that's what the borrower is willing to pay, and that's really where we get value in, is where the borrower is willing to pay. Speaking of FHA changes, I want to remind everybody out there that the FHA 90-day flip rule has been revoked, taken out, suspended temporarily during this times of increased foreclosure activity. Used to be if a house was bought or sold within a 90-day period, you could not go out and secure an FHA loan on it. Well, they put a moratorium on that because there's so many foreclosures out there. They wanted to give people a chance to buy foreclosures.
Fix them up, sell them, make a profit.
That's exactly right. But it's not a blank check that you get to write if you're trying to flip a house and you want to sell it within 90 days and want the buyer to use a FHA loan. A couple of guidelines that are in place: the house can't be sold for more than 20% of what you bought it for. You have to be owner entitled on the property, so you can't do same-day flips or pass-throughs as they're called. A couple other guidelines, just some other tweaks about the appraisal. You're probably going to have to get 2 appraisals on the property. You can't sell it to a relative or anything like that. It has to be an arm's length transaction. That's right. We said we weren't going to do that anymore. We're going to try. So yeah, arm's length transaction, can't make more than 20% as a seller. A couple of other little things out there, but just remember that you can purchase a home less than 90 days on an FHA loan because they do have a moratorium.
It can be done. It sounds like those will be a little bit tricky. So if you do have something like that, you got a client that is going to flip a property, purchase it with intent to put some money into it, turn around and sell it, make sure you're dealing with a lender like ourselves that knows what to do and can get it done right.
That's exactly right. Quick credit tip of the day. You know, we've talked about paying your bills on time. We've talked about keeping your balances low. Let's talk about the length of your credit history. That's like your credit depth. One of the things you don't want to do is close out any older accounts that you may have. And even if you're older, like Visa, MasterCards may have 30-40% interest rate on them, don't charge anything on them, maybe just a little bit every month and pay it off because then you won't get charged the interest.
Right.
But keep those accounts open. Keep those accounts open because anything with a long history on your credit report is called credit depth. And you want credit depth that's going to help your credit score. Remember, higher credit scores mean bigger cash flow on a monthly basis because of lower car payments, lower house payments, lower credit card bills. So keep your credit looking good. All right, guys, thanks for listening to Austin Real Estate Daily. Remember, real estate happens on
A daily basis.
That's right. And we'll see you guys tomorrow.
We'll see you then.
Bye-bye.